in the 21st century. Hard-working people working hard for you and me. Moving higher, time and time again. Through the years you'll find us here. Moving higher.
Hello and welcome to Moving Iron Podcast Tax Moves. Glen Birnbaum. Glen is a CPA out of Heinold-Banwart in East Peoria, Illinois. And Glen is on the podcast again to bring some more clarity to what's going on with this PPP thing. But first, this edition of the Moving Iron Podcast is brought to you by Dawson Tire and Wheel, your premier ag tire and wheel provider in North America, helping people grow. TractorZoom, delivering insights. And the official Work Boot of Moving Iron Podcast is Dryshod Boots. Glen, how you doing this morning, bud?
Hey, not too bad, Casey.
Well, there has been some new kind of revelations here about what's going on, and back and forth through the first phase of the whole Paycheck Protection Program, PPP, as most people know it as. And at the time, they were kind of back and forth if farmers were going to be eligible for it and what it looked like, and were they going to come up with a different program for farmers and this, that, and the other thing. But lo and behold, here late this week, like Thursday, Friday this week, they rolled out the kind of some guidelines on that farmers would be available for this. So, Glen, I guess give us some feedback and some insights as to what you know about this new part of the program.
Yeah, glad to do it, Casey. And it is Saturday, April 25th. We're recording this, but there was a lot of activity Friday morning, Friday afternoon, Friday late evening. So quite a bit of new guidance came out on this PPP, the Paycheck Protection Program, this SBA loan, where potentially, if you do the right things, you can have, this loan forgiven, which quite a big deal. And so the reason why, this is coming up again is, you may remember Friday, April 3rd was the first day you could apply. Then it was Friday, April 10th was like for people who were self-employed, who really didn't have a payroll. And so now they're going to be opening up again here coming up on Monday, because they got to increase funding. So I believe it's going to be Monday, 10:30 a.m. Eastern. It's going to be back where the lenders will be able to, enter in additional information into this SBA software system and start the process all over again. They got another $300 or so billion. Started out at 349. So should be quite a bit of activity on Monday.
Yeah. All right. So some of the stuff that I've heard and read and seen as far as this program goes is that it's strictly based off of what your taxable income is, correct? So if you are a sole proprietor or a single entity type business of some sort, and your taxable income is $0 or $10,000 or something like that, it's based solely off that, correct? That's still the same.
And that would be if you have no payroll, right? If you're not, paying somebody wages or W-2, which a lot of farmers don't have payroll, right? So, your typical farmer, it's just going to really be based on that Schedule F net profit, line 34, I believe. Again, that, as you alluded to, we weren't even sure, because in some of the original guidance that came out, earlier this week, actually, not that long ago, but earlier in the week, they just talked about Schedule C. But this information that came out Friday said, no, now we know for sure Schedule F farmers can't apply. But unfortunately, it's based on Schedule F profit, which in a lot of cases, particularly, and we've talked about this a fair amount over the last couple of years, if you've traded off equipment during the year, now you have to recognize that gain, and that gain is not subject to self-employment tax. So it ends up going on a different schedule. And then what you try to do is depreciate that gain, to get your income back level. And so you may, very likely you could even have a loss on your Schedule F, let alone, could be a small profit. So they provided no rule or no unique carve out that says, let's try to consider, this equipment gain. So none of that. It's just straight Schedule F.
Okay. So the other side of this, I don't know how long this has been around, but I picked up on it late last week, and I don't really remember the name of it, but it was like economic injury something or another. Does that ring a bell with you?
Economic injury disaster loans, EIDL. We've not talked a bunch about it. It's a totally different program, but it is part of the SBA. But number one, the loans are not forgivable, except for possibly a $10,000 grant, it's called, which is kind of a special thing. But they're not forgivable. You do actually log into the SBA system, and that system is not. I was on a couple webinars today with the SBA. That system will not be up and running on Monday. I'm not sure they're going to be restarting that one. If you've heard about this, maybe you have, but for the listeners out there, there was some issues, not with the PPP program, but with this EIDL and the interface that people's Social Security numbers were being left in the forms, like when somebody new came in. And so there's a fair amount of concern that your personal information, because you had to apply a lot more things, Social Security numbers, personal financials and things. And so that EIDL may be a little put on the back burner. But yeah, the other thing is you have no idea how much of a loan you're going to get. They use some sort of formula kind of based on your financials and based on your working capital, but you don't even say, hey, I'd like to request a $100,000 loan. It's totally up to them. And there's been very little funded on that that I know of. It's really designed more for like a true, disaster, like a hurricane or something, I believe, not really a nationwide or global pandemic. But early on, that program was getting a lot of the attention because the SBA knew they were doing webinars. They knew about that program. So they were, we were listening to webinars that all they were talking about was that EIDL. The PPP was still being worked through.
Okay, so let's talk about this from a financial perspective. So you still got the PPP deal, and you get 10 weeks worth of payroll that you get, and you have 8 weeks to pay it back, right? And they actually have created more, after they've given this money out, they've created more guidelines and more like, well, if this happens, then you have to do this. And they've kind of screwed that down a little bit as to what you can and can't do. I mean, beforehand, it was just kind of a Wild West approach of, here's your however many millions of dollars you're going to get and whatever else. And and by the way, just make sure you spend it all on this stuff here. And, it's got to be spent on payroll, a little bit of rent, a little bit of interest, those kind of things. But overwhelmingly, 75% of it's got to be spent on your payroll. They've since changed that a little bit, have they not?
Yeah, and we still do not have guidance on how this forgiveness works. How do I make sure I spend the money properly? Is it based on accrual basis accounting, cash basis accounting? So we're waiting on that stuff. But what you're touching on has been really the biggest news item in the last couple of days is just the pure eligibility of this. Am I eligible? And in particular, focusing on public companies. And, it's come out, I think, that over $150 million of loans were issued to public companies. Shake Shack is one. Ruth's Chris Steakhouse is one. One that I didn't know about was Auto Nation, I believe, which is a large car dealership, publicly traded car dealership. And so they've kind of come out. This is one of the new things that happened Friday morning is, they came out with this new question that says, hey, do businesses owned by large companies with adequate sources of liquidity to support the business's ongoing operations qualify for a PPP loan? So, and they're kind of saying, no, so it says large companies, but then the answer, it says all borrowers should review carefully, what you're certifying. And so probably one of the most important takeaways here, we're not providing tax or legal advice, but definitely, consult with your attorney to make sure, because the rules have changed or they've reinterpreted the rules, because originally it was just, hey, current economic uncertainty makes this loan request necessary to support the ongoing operations. That was kind of what you were signing off of, do I have economic uncertainty? And then, do I kind of need this loan? Is it necessary to support the ongoing operations? In other words, is it necessary, or otherwise I'm going to lay off people, right?
Right.
So that was what you were certifying. Now they're saying, well, you should take into account, the current business activity, which does that mean revenues or profits? And it says, and then the ability to access other sources of liquidity. So, and so they come right out and say it. For example, it is unlikely that a public company with substantial market value will be able to make the required certification in good faith. So they pretty much come out and said, public companies, no dice, and you've got until May 7th to pay it back.
So are they going to look at balance sheets? Or have they lined that out? I mean, there's some private companies out there that are going to be pretty liquid,
we just don't know. I mean, there's no requirement for a balance sheet, unlike that EIDL, which we were just talking about. You would have financials. So it's really got people, rightfully a little bit spooked because they are they're at least reinterpreting the rules after the fact. Again, we're going back to April 3rd.
Right.
That's a long time ago. It's April 25th right now.
Yep.
So I don't know, but I guess they may come out with some additional guidance, but it's up to what we're understanding. Attorneys, hey, consult with your attorney. Maybe you need to have a board of director meeting, and really make sure the board, whoever is in the leadership role of the company, can still be comfortable with certifying this.
That's crazy that they've kind of hung this carrot out there that says, here's the money, go get it, but be leery that we could come back and jerk it from you, and we don't know for sure why we're going to do it or if we're going to do it.
Yeah.
It's kind of scary.
Yep. So, that was the first bit of information, would have been Friday morning, that they kind of put this new question out about redefining eligibility.
Mm-hmm. So the webinars you attended today, anything there that left you feeling uneasy about what you heard, didn't hear, or did you left with more questions than you came with?
It was, and this is probably the third or fourth one. It's an Illinois, for the whole state of Illinois, and this same guy who does it each time. He's really pretty sharp, and there's a lot of questions to ask. So the first one was more of a generic one, and then the second one, which I was most interested in, was specific to self-employed people. It was supposed to be all about self-employed. They didn't get into a bunch of details on it, but they definitely kept saying, hey, there's going to be more guidance coming on the forgiveness. They didn't really talk much at all about the eligibility, probably because we're not dealing with big, large companies as a general rule of thumb. So I think overall, no particular. I felt okay about it. I feel like I know no major surprises. But they're kind of hamstrung in the type of questions they can answer. They can really answer.
Yeah.
But definitely there were people, asking questions like, hey, I didn't make any money last year. I just started up my business last year. And there's really, he really didn't say anything. And the other thing, which is an excellent question, is June 30th is really the cutoff of this, that at the end of the 8 weeks stops at June 30th. And so, if we go another week or two here, somebody was like, well, what if I spend some money, in the 8th week, but, it's first week of July, right? Will that count? And, he said, well, at this point, that's not what the bill says or the law says. And obviously they could extend that, but, he can only say no, that's what it is. The other thing somebody asked, is, hey, if you're shut down, right, for the next few weeks, or, do I get a grace period, right? Does my 8 week period start, a month from now, let's say, right? That would maybe make a little more sense, right?
Yep.
But, again, his answer was, hey, and it's the right answer. Technically, no, there's no provision to push this loan off for a few weeks. So
that's crazy. Those bills they come out with, man, it's just so, $199 the grain glitch thing, holy crap, that took 18 months to get that to where we still kind of don't know for sure, but it's sort of, it's closer anyway, but it's
so, the bill was passed, March 27th, so it's April 25th, and 30 days was supposed to be as long as they had to provide this guidance or these regulations. So that would be tomorrow, April 26th, technically. Yeah. So, are we going to get the forgiveness guidance tomorrow, or at least kind of first thing Monday before the loans open up? I would like to think so, but I'm not betting on it because, they finally, and I guess, this will be our next topic, is they finally got around to really hammering home the specifics of how is your loan amount calculated? Very specifically going down each type of entity. Here's the line items on the tax return. And this just came out late yesterday.
That's crazy. That's crazy. They put that much money out to a bunch of people who are utterly concerned about the health of their business and whether or not they're going to be able to employ their people, and have zero guidance behind what they're going to do with it, or they may be completely using it wrong, and they're just not going to find out about it.
And I think it's gotten people spooked just from articles I've read or different things, I think there's business owners that are now saying, well, I guess maybe if I'm not super comfortable with this certification, maybe I do need to pay the money back. And then what they're considering is then laying off people.
Yeah.
Right. Because it's kind of a catch-22.
Yeah.
So what they came out with, and this, again, I alluded to in the intro, this is not an interim final rule. This is not a frequently asked questions document. It's it's another type of document, but it has questions and answers in it. And it's entirely, we've talked a lot about this, based on entity choice, right? You want to be an S Corp or a sole proprietor or a C Corp, and it kind of goes through, pretty specifically, hey, what line items on the tax return do you pick up, and how do you compute payroll costs, which, 2.5 months of payroll costs. So finally, we're getting the clarity that we need, basically three weeks later. And so the biggest surprise in it, which isn't massive, but it shows some inconsistencies, is how do I claim this if I'm a partnership? And they came out with guidance last week that said, okay, well, if you don't pay your owners, which you should not pay your owners a wage, then you don't really have payroll. You have limited payroll. Well, they said you can count like a guaranteed payment to a partner. So, and the partnership can file it. The partner doesn't have to file it. So kind of made sense. Well, in this guidance, they get rather specific, which they should, about, what box on the K1 you should use, and you should subtract off certain things. And then they talk about taking this box, which is basically box 14, taking it times 92.35%. Okay. Taking it times 92.35%, which is 1 minus the Social Security and Medicare. It's 7.65%. So This is getting a little technical, but this just shows you kind of how they're a little bit off. Now, when you take Schedule F income of $100,000, you actually take that number times 92.35%, and that's what you actually pay your self-employment tax on. It's kind of trying to equate to, a company where the employer would pay 7.65%. So this has been done this way for years. It's called Schedule SE. So a Schedule C or a Schedule F, you take it times 92.35%. And a lot of people before the guidance came out a week ago said, well, no, it's going to be Schedule F income times 92.35%. They said, no, we're going to make it 100% for Schedule F income. But for a partner in a partnership, we're going to take it times 92.35%. Which anyone I've talked, it just doesn't make any sense whatsoever. It's inconsistent. Is it that big a deal? No, but it's just surprising. They even footnote it and they say, here's why we're taking it times 92.35%. But the exact same thing is there for a Schedule F farmer or a Schedule C. So that was kind of the one thing that I think it just, maybe just lessened some confidence in the process because, So you can't predict this, right? I would have said, well, no, they're not going to take it times 92.35% because Schedule C doesn't have to do it, and so now they come out with it. So who knows what they're going to do with this forgiveness part of the law, which is obviously the biggest point of this. And a lot of people got funded last week, this past week, or some of them even got funded late the week before. So most people have probably got their money, or they're going to get it on Monday. And so then the next thing is, how do I, they're not trying to do anything wrong. They're just trying to be proactive about what are the rules, right, surrounding this 8-week period. And we really, as their accountants or other advisors, we really don't know the answers.
Yeah, that's tough. It's a tough place to be, having a big pile of money like that. Worst case scenario, you got to pay it back over 2 years at 1%, and you have a pretty cheap line of credit, for lack of a better term, but at the same time, can you even pay it back at the payment wise? You know what I'm saying? So there's just a million things going on there. So crazy stuff. Well, Glenn,
so yeah, stuff. I think it's, again, I keep mentioning this, but I think your attorney, even just having somebody look over the loan document, because what that loan document says, is obviously it's a legal document, and making sure you're comfortable still that you're still eligible. And hopefully we'll get some more guidance next week on the forgiveness.
Oh, good stuff. Good stuff, Glenn. So if folks want to reach out to you and ask you some questions about this, or just pick your brain about some stuff going on with all this COVID-19 and the different bills and funds and stuff that are available, what's the best way to do that?
Yeah, it's best just to call our office here at Heinel Banward. Phone number is 309-694-4251. You can ask for me, and that'll ring to my cell phone. So we're still working, but remotely, as a lot of businesses are. Or you can look me up on Twitter at Glen Birnbaum is my handle.
Yeah, and make sure you check that out when I get this posted. There'll be several other accountants that chime in on it. So, Glenn, thanks for being on the podcast, man. Thanks for stepping out here on a Saturday evening to get this thing going.
Well, I appreciate it, Casey. Thank you.
All right. I'm Casey Seymour with Moving Iron Podcast. Make sure you check me out on Facebook, Twitter, and Instagram at Moving Iron LLC. Also, check out movingironllc.com for all the latest Moving Iron stuff. I got a blog post I posted here this week, and I'll have another one I'll post here later, either late this weekend or early next week. So check that out. And check out the Global Ag Network and all the great podcasters on there. And if you want to attend the Moving Iron Summit, Nashville, Tennessee, September 1 through 3, hit me up at Moving Iron Podcast at movingironpodcast.com, and sure to get you all the information about that. So until next time, I am Casey Seymour with Glen Birnbaum. Let's go move some iron, folks. Out.
Moving iron in the 21st century.